All I need from you today is 5 minutes of your undivided attention, and I'll be able to show you exactly what's going on in the market, where we're headed, and what should you be aware of. Especially most of you that are completely or well oblivious to technical analysis and don't understand how this thing works. So I'm gonna make this what I would call technical analysis or charting made simple. Those who will stick around for the entire video will actually benefit a little tidbit that will be at the end of the video, and some other little tidbits that I'll sprinkle around the video itself. But for now, let's get into this. It's pretty simple and pretty evident. If you look at the chart right now and you realize that we're looking at the SPX, you'll see the ticker right here, right above my head, SPX, S&P 500. If you'll trail with me and you'll follow up on the price action since, well, we've been in this trend, which is roughly since 2015. This is when we sort of penetrated, landed within this channel, if you will. Been pretty consistent since then. As you can see, we've moved alongside of this channel since 2015, as I've been saying, testing this sort of median area multiple times, then testing the ceiling again, which 2022, breaking back down towards 34.90 range, and climbing back up, penetrating above previous highs. Still, as you can see, behaving and well, giving respect to the way this trend is built, or rather the structure is preventing the price action from penetrating and going any higher within the framework of a channel that was moving inside of it as itself, although sometimes breaking out and dropping and retesting previous support and resistances that are in the framework of the very same channel, by the way. Now, you're asking yourself, Greg, I mean, even if you're correct and we're going to drop from this area, which, by the way, those who think that's going to happen the very next day, tomorrow, as I say that, well, do not misunderstand me. That's like not at all what I'm saying. First of all, there is plenty of momentum that may result in the closure of this gap. For example, if we go over the 30 minutes, if I'm not mistaken, this 30-minute time frame is showing us potentially the closure of this gap. So do not think it means exactly, tomorrow the price action will start breaking down any further right away. In fact, if you look at this 30 minutes and I think 45 and even hour, we may assume that there is enough momentum in the system to close that gap. So as you can see, we have all it takes to close that gap. But what I really want to show off here is something that has to do with history and something that has to do with the current location of where we are in the overall cycle. I'm going to switch to 3 months for the time being, which now becomes a lot more evident how the price action has been moving within the framework of this channel, right? And although we ended up retesting the bottom of the channel, as you can see, and now we are back again, which arguably can be almost seen as if we have not done that. Now, again, if we break from the top of the channel to where the bottom of the channel is right now, give or take, we end up with roughly 20% downside. Greg, what are you talking about? How did you get that 50% mark? Well, I'll show you something. If we switch to that 3 months view, right, it seems like we are kind of moving in terms of momentum. We are at the ceiling and we're potentially overturning. What I want to highlight here is the larger time frame and previous cycles, if you will, which is very, very important. Now we're expanding. We're going further out. We're looking at, well, at a larger time frame, if you will, at a half-year time frame. And what we get here is pretty interesting. What we can get here is we can see at the previous cycle where we had the 2009, right, where we had the housing bubble crash, however you would prefer to call it. If you pay attention, we had something very similar. We had a big volatile wave that concluded within this drop of the tech bubble crash in the year 2000, that then led into the real estate bubble in 2008, 2009. But pay attention to what's going on here with the momentum, with the stochastic RSI. As we saw, this wave came to a conclusion right here. But the secondary wave pushed through our 50 range, which we usually use as indication to where we transfer from bearish. Everything below 50 is basically bearish territory. Below 80 is extra bearish, bearish on steroids, bullish above 50, and bullish on steroids above 80, right? So pretty simple. But as you can see, the sort of structure that we had that we can correlate, right here to the price action to correlate with this secondary wave that, by the way, we're going to zoom in on it in a second. You're going to see that we're now coming in with a very similar structure. We had now a singular big volatile wave that resulted within all this rally. And now we're coming to what appears to be, if you, for example, can see here, we had very little momentum in the beginning of the cycle or that particular limb of the process, right? As you can see, it sort of fits into the range. We're moving within the larger range, and then we were accelerating, so there was more momentum in the system as we were going upwards. And as you can see right here, for the last well, year and a half, if you will, we've been hitting that very same ceiling again and again and again, right? But not truly able, of course, to penetrate it, because as you realize, because time is a factor and we keep on progressing to the right all the time, guess what? The same way we penetrated into this channel, right, from the past, we moved into this channel to the right, the same way we eventually are going to move over to a channel to the right. Far more likely, if you look throughout history, you realize that's what we've been doing for the last, well, 100+ years, right? So at the end of the day, what you need to understand is that we're actually having a very similar structure. Although, by the way, I keep on saying that in the community, which I'll refer to in a second, and I keep on saying that in the meetings, in the members' meetings all the time, that these two waves are truly incomparable. Now, Greg, how are you saying it's incomparable yet comparing them? If you look in terms of how the cyclicality of the momentum behaves and represents where we are in the overall cycle, we're basically getting a very much the identical structure. And so it could be comparable with that sense of the matter, right? We could use just this previous part of the cycle as some sort of a template to see what is going on in this part of the cycle. And we're also starting to identify some of that curvature that is going on here, basically the crossing of the forces, the confluence of the forces, which indicates the transition from bullish to what it is right now to bearish to what it will be in the future. And we're all moving there in great big quick steps depending on which time frame you look at. For example, our monthly is already curving inwards. As you can see, our weekly is very much preparing us for a significant downtrend that may result in multiple months of downtrend and bearish behavior from the price action. And it's pretty indicative and very obvious on that weekly chart. And those of you who know how long this can take, well, there you go, right? And so even though these things are really incomparable, and by the way, if you look into the past, if you go to 71 when Nixon, to the 70s when Nixon moved the U.S. from the gold standard to the petrodollar, if you will, we'll actually find something very similar. We'll find very similar behavior. Right here we are in the 70s, right here is 70, 71. As you can see, we got very similar sort of behavior, right? We had this, what appears to be this some sort of high. Now let's look at this from the 3-month standpoint, if we can actually observe it from the 3-month standpoint, and we're going to identify something very similar, right? Look, we are again hitting a certain significant high, or for example, you can identify actually here a very similar sort of behavior that we are getting right here, right now, that led into this first breakdown and then into the second breakdown. So here it is. You can literally identify how we've been through very similar processes or cycles, if you will, before in the past, and they end up resulting in looking very similarly. And well, at least that what is the momentum saying. On the 6 months, it looks maybe a little bit different, but still you can identify that overall downtrend that was happening back then. Right, here it is. And this is why partially you should be worried and understand that this cyclicality is very consistent and does take a very long time. And well, as you can see, at least on the momentum indicator, we're basically leading into exactly that sort of cycle. We've been through that before twice, and we're now leading into this for the third time, which some of you actually understand how important this is, that we're doing this for the third time round. And you can actually see that curvature starting to happen the same way we had it here, leading into a bear trend, which you need to understand. This again is comparable to our breakdown. And you're like, again, where's that 50%, Greg? Well, that 50% is very simple. Imagine if we're going to do actually something similar to, if you compare to the breakdown we had back then in 2008, 2009, the true numbers, you'll actually learn that it's give or take within the range of 57% downwards. In fact, I'm pretty sure it was even more significant. Let me try and get the exact numbers. Here it is. The exact numbers for that breakdown were, yeah, 57.69%. So it's not all far-fetched to look at what we are looking at right now, the chasm that we're preparing to go into. Although, like I said, it's not perfectly comparable to this particular place in the cycle, it's comparable enough to understand the potential of damage that this may result in. And so, yes, what I am saying, and there, by the way, there are multiple other factors that I'm not mentioning right now, and maybe it's a good time to mention my community, which my community are completely aware of. We talk about these things all the time. And by the way, I think now is the time to sort of, throw in that little tidbit that I was saying. By the way, I'm so proud of my members. This is something I really want to show off. One of my members within 31 days using Thanks for Your Lessons, plus some thinking of my own, of course. The person has, a head on his shoulders. One of my best students in the community have made 183,000, well, borderline 184,000 within 31 days using the strategies and the mechanisms that are technical analysis and everything that I teach in the One-on-One Academy. If you want to know about the One-on-One Academy, join in the Discord, open a support ticket, which you can do via going here, Need Help Academy application, pretty simple. The Academy right now is still discounted. It the price will change. I will hike up the price eventually at some point to 4,000, right? But just for now, those who want to know, I'm gonna put on the screen right now how to get into the community. Actually, it's pretty simple. You go to patreon.com /investory, and you'll be met with two tiers, which now are still, by the way, discounted. Be very attentive. This tier right now, if you do, by the way, put this in, as you can see, you can end up paying only $12 a month. That is with a promo code that I have right now running on in the community, if you will. Now this, instead of being $60, the advanced tier, which is going to be changed, is going to be changed to something even more advanced. I'm planning to do something really great with this tier, and it's going to be $99 a month. $100 a month basically. So right now it's super discounted. In case you don't get this option of automated discount from the system, here it is. Let me give it to you. What you need to do is use this promo code, the BD50. You go to patreon.com /investory, BD50. And what you will benefit is, first of all, several meetings a week. We have several meetings a week on the in the community itself. Whether we have the community exclusives, if members exclusive stuff that I post, it's members meetings that we have every week. We have the advanced meetings. Of course, the academy stuff is for the academy members only, those who graduated the One-on-One Academy. We have our voice channels where we hang out, our main chat where you can kind of talk and post anything and everything regarding the market, and various other channels. I'm not going to break down every single channel, but we have a very cool Discord here, including me posting my positions, charting 101 little tips and tidbits about technical analysis, not including everything I pass down to my students in the lessons, breakdown of what I'm holding right now, when I'm selling, what I'm selling. I'm kind of informing my pupils and students about that as well. There's the Chat Academy and their notes and plenty more stuff. But really, really, really what I want you to focus on is the testimonials, where the one-on-one students really break down what their experience was, what did they gain from this experience. And yeah, as you can see, some of the things that we post, for example, just recently I had this amazing brag, which I cannot stop showing off. Leo, you're amazing. Shout out to you. Done an amazing job using the entire array of tools that I teach in the academy. And so, yeah, everything is discounted right now, whether it's the Patreon, it's a double discount. You can also sign up for annual membership and gives you a whole, bunch of more discounts. So you end up paying only $12 a month. It's basically peanuts right now, and you'll get to learn and understand these things in advance and not in the last second, so to speak. Although I've been preaching and talking about these things for the last year, I've been preparing and preparing and preparing and preparing everyone. And so if you were not prepared, it's on you, really. I've been talking about this just non-stop, explaining how these cycles work, how the support and resistances work, how the ranges work, how everything, literally everything that has to do with this every single day, breaking down in the live sessions, in the academy, you name it. I've been doing so much for people to be aware of this. Again, if you really want me to be like some of these YouTubers right now are telling you what is in front of you and I just made a video recently saying, guys, be attentive to who says what when, and now everybody's going to tell you, oh, I told you and I warned you months in advance, this in advance. No, it's all bullshit. You can go into my video library, into my channel, and find out that I've been warning and preparing everyone for this exact thing, which, by the way, doesn't mean it's going to start tomorrow. We may be still waiting for CPI report to come in on the 12th, not the 11th. It's on the 12th. Whether it is Trump's big beautiful bill to take effect, whether it's tariffs to take effect, whether it's geopolitical tensions and supply chain disruptions, so many things, inflation hitting back with vengeance, you name it. Literally, there are so many factors that could play into this that it's so premature to say what exactly is going to be the thing that breaks the stick being bent so far above and beyond what it should have been bent ever. But as you can tell, at least the technical analysis and the technical indicators have been screaming and telling us these things. And those who want to pay attention and understand why it's so important, good. You'll know and you'll be prepared. Those who don't want to understand, stay blind, do as you wish. Just don't come crying to me that Greg, what do I do now? Later, there's not much to do, and in fact, I'm not here to tell you what to do. I'm not, your account manager. This is not financial advice. You do you. What I am here to tell you is what I am identifying using my technical analysis skills, which I teach in the community, and I highly recommend you do know that as well. Because even if you're an investor, it affects you as well. It doesn't matter who you are, trader, investor. There are plenty of ways you can leverage or at least not be surprised by it, which will give you some calm and ease throughout the process to navigate through the potential pain that is up to come. That's it, boys and girls. That's all I had to say. I know it took a little bit more than 5 minutes, but I'm sure that it's worth your time. If you want to, press the likes, switch the bell to everything so you'll be notified whenever I go live, post a video, and you'll come to understand these things over time. Don't expect yourself to listen to a video once a year and understand everything. That's not how it works. So yeah, here it is again, just in case those who did not write, and if you stayed around for this long, patreon.com/investory. BD50 grants you 50% discount. And in fact, if you go right now, I'm pretty sure because I sort of put it onto automated whatever blah blah woof woof thing, it's supposed to be functioning automatically the same way. You see I get a more significant discount because this tier originally is $60, this tier originally is $30, which by the way both of those will be hiked, so definitely take advantage. Sign up before it's too late, because I've been warning and preparing everyone. I'll hike up the prices for quite a while, including the academy, by the way, which here it is in the message board. If you can see, a long time ago, right, during the month of May, I've said that once S&P starts moving and we're getting to 5,000, I'll be hiking up the price to 3,500 per student basically, and it's one-on-one lessons, just to be clear. And when SPX drops to 4,000, I'll be hiking up the price of the academy for 4,000 basically. So definitely take advantage of the opportunity. Sign up. Everything is super discounted now. I'll see you in the community. I'll see you later in the next one or wherever, right? Maybe out there in the world. Have a great day. Bye for now, everyone.